Hi everyone, it's Stuart here, and welcome to Thursday. It's the 24th of April. Hope you're all well and your train's going well. So today we got the weekly claims data. Remember, jobs have remained remarkably strong and showing remarkable resilience, especially in these weekly claims numbers. We'll have a look at the data in a minute. Actually, let's have a look at the calendar. We'll go back to the charts. These are out in 15 minutes' time. So today, been relatively quiet this morning in Europe. We had those car registrations, which weren't, although on paper they looked at a big surprise here in the UK. New car registrations. It was all to do with the tax changes for the end of the financial year. So don't read too much into that. The key surprise this morning really was these consumer confidence numbers and the sentiment numbers out of Europe, out of Europe's two biggest economies, France and Germany. French consumer confidence came at 92. It was expected to dip just only a point, but it's still, it's fact it's come back is a surprise. But more importantly, the iPhone number out of Germany, business climate 86.9 from 86.7, but it was expected again another one to decline, maybe 2 whole points to around about the 85 level. So obviously, the reaction to Europe and the and the tariff situation is in hand, as we say. It's changing from day to day, but this is a relative positive surprise out of the EU this morning. So we've after 2 days of a bit of a rally or a bit of a bounce for the dollar. The dollar's back down again today, and stocks are down, having had a very strong day yesterday in recovery. Again, across the globe, really, from the Nikkei, which we are still long on, even though it's cool today. The FTSE in London and the DAX over in Frankfurt. But as I say, we're waiting for the weekly claims numbers, and the durable goods are also out today as well at the same time. So initial claims, that's the key one, 222,000. So I say it's remaining remarkably robust. The impact of the tariffs have yet to sort of have an impact either way, but it's showing that jobs, people are still hanging on to jobs. There's no new surge in unemployment or anything like that. And obviously at the moment, there's no big jobs coming back on the back of the tariffs at the moment. That will obviously, that's the ultimate aim for the president, but see how it all pans out in the fullness of time. He's fighting a very long-term opponent in the Chinese, plan in multiple election cycles as far as the West is concerned. 5-year cycle in China is nothing. They're planning 20, 30 years ahead, and they've got some big numbers and big plans as they move forward. Still, the manufacturing hub of the world. They've then outsourced to local Asian partners, local countries close to them as well. But massive uptick in service jobs as well in China, and obviously the arrival of their own rival to ChatGPT earlier this year has caused major surprises. Certainly in the establishment in the West. So anyway, he's picked a very difficult fight trying to take the Chinese on. But anyway, so such is his determination to move forward. So have a look in 15 minutes, 8 minutes, it says there on the calendar what's going on. So let's have a quick look at where we are in the market. So this is the euro here on the chart. Let's make me a wee bit smaller so you can see the charts a wee bit clearer. Hopefully, there we are. You don't need me staring down the screen at you too. So 115 we went to earlier in the week. We couldn't hold it. And then we had 2 positive days for the dollar against the euro and against most of its crosses, having weakened very significantly. So euro dollar now finds this support here at 113.10. So not quite at the 113 area. We've bounced off that this morning. We've been you'd have been long the euro against the dollar. So there's that 113 area. That's the 113.10 area again last night, and moved up from that over the 20-hour moving average, but can't break the 50-hour moving average and rolled back down currently. So not a great deal of action from the lows of last night. But we are positive for the day. The 200-hour moving average, 50-hour moving from above to below. That's a negative move. So we'll see if this starts to either move back down into this 113 zone. 113.45 is the next support area. Before that, we've got the 20-hour at 113.63, which is sort of where we're testing at the moment. So resistance to the upside for the rest of the day. Big resistance sits there through that flat 200-hour moving average at 113.90. So what this data looks like. So let's bring this down. We've got all those lines marked on there anyway. That's a key area. That's a key area. So if we go down to the 5-minute chart, see how we react to the data. As I say, on the 5-minute chart, we've bounced off this 113.90 zone, shy of the 114 so far this morning. Nice channel with heads and shoulders, congestion, and now we're breaking down. And that was a significant move down there. Little over half an hour ago, that candle there. So will we test this 200-hour here on the 5-minute chart as we move to the downtime? We are continuing to move down. So Euro's had a better day, but in the last hour or so, the euro starting to weaken, and so the other major crosses. So let's go back to elsewhere in the market before the data comes across in 5 minutes. Bitcoin 92,500. Take it up to the daily time frame again. We'll come back to the euro in a minute. So again, we talked about this yesterday, didn't we? 3-day strong candle, 3 white soldiers as far as the candle analysis is concerned. Cooling a wee bit today, but the key break over the last couple of days has been the breach, as we said yesterday, of this 38.82 fib of the down leg here from February to March, and the 200-day, more importantly, or just as importantly, the 200-day moving average, and the fact we broke it very aggressively with a big, strong candle. That's attracted more buyers yesterday, which took us through the 50 fib level, and then after 61.8, the key golden ratio at 95 or 96,000 is the next upside target, obviously before we get to the 100,000. So Bitcoin reads bid. As far as today's concerned, we've rolled over a tad, and we're down a bit like as the dollar's come back. But again, another one that's bounced off and moving back up as we've ran into this another fib level as well. That's at the green. I think it must be the 50 fib levels provided support today on the hourly chart at the moment. Having tested it, this is the 4-hour. So once, twice. Look at the 1 hour on that fib level. So there's the test. There's the test again this morning at 9 o'clock, and we've rallied off it. So this is our support today, the 50 fib level, just below the key 92,000 level. Remember, that was a key range earlier in the year. And so Bitcoin back up and holding in that key 92,000 level range. So overall, a very positive biased Bitcoin market at the moment. Oil 63.26. That's also up on the day, up on the to the daily time frame. Up on the day, having suffered quite a significant decline yesterday, quite an engulfing candle yesterday. Once again, rejecting the 20-day moving average. So we do need to, if we're going to move up and break out this consolidation zone, we need to move up through the 20-day moving average. It sits at 64 level. The support sits around this, again, another fib level, the 38.2 fib level here at 61.85. And we've been going sideways here now for 4 or 5 days. Quite a significant down candle yesterday of this in this congestion zone at the moment. But at the moment, we bounced a wee bit to the upside following the inventories yesterday. MACD histogram remains positive. With the MACD and the signal line crossing positively earlier this week, wasn't it, on Monday, the 21st? So, but we know a bit range band there on the oil markets. We looked at the euro and all the other major dollar crosses, a similar setup. So Aussie is back over 63.80, so rejecting again the .64 handle we got to on Monday. So that's looking like a significant resistance level. You see these, especially yesterday, these strong big wicks rejecting the 200-day above that, as well as 64. 64.70 zone. So 64 itself is a big resistance area, which Aussie looks like it's struggling to break. Also, but this week we've also had the 20-day crossing above the 50-day moving average, although the histograms are starting to cool here on the MACD. So consolidation in line there with big support at this 63.33 area we talked about earlier. In the zone, so Aussie in there. CAD 138.66 in the moment, again and testing 138, buys at 138, and again just bouncing off that in a bit of a consolidation zone there. Swissy 82.57, that's recovered quite well from this 81 area we went down to on Monday. Strong day for the dollar Tuesday, Wednesday, and again like the other major crosses back down, but still remains in a downtrend under 83.80 where the 20-day moving average is. So that's still weak. Yen 142.50. Again, very, very similar pattern. 140 is the big support area. We're 250 pips above that at the moment at 142.50. But another down day compared to the strong move we had on Tuesday and particularly yesterday. So, everything playing out. All eyes on Washington and this trade talks. Scott Bessent yesterday, Treasury Secretary, also talked about that the tariffs with China being unsustainable. I mean, that goes without saying, doesn't it? But he said it publicly. So it's the cooling rhetoric on particularly on China, heightened expectations about a bilateral trade deal between India and the US, and India and Japan and the US getting closer. But again, devil is always in the detail. The headlines continue to wake on anything that's coming out of Washington in particular. So we got a stronger dollar. Can it sustain? It's unclear yet at the moment. So let's have a look how the dollar reacts to the data at the moment. So the euro, say down for 2 days. Dollars bounced back a wee bit today, and at the moment here on our 5-minute trading standard time frame, we've tested this low from this morning. The daily low so far today has been down here at 113.30. So 113.30 is our down low. We need to breach this 200 period moving average here on the 5-minute chart. But let's just have a quick look at the data as it's come across the terminal. I'll just update our calendar here and have a look at what we got for Thursday. So 222,000 for weekly claims. Again, bang in line with expectations. Last week was actually revised up a tick, just 1,000 note. Average 4-week average now 220,000. It's remained remarkably stable. Big rise in durable goods, and again, I should mention that in the introduction. Not really surprised given the front loading of inventories ahead of tariff expectation, but this is just proof that that's actually happening. So huge spike in inventories, and again, it's not a particular surprise. But a big rise. So continuing claims continue to actually it's ticked up a wee bit, but they're still around that 1.8 million, 1.88 million, 1.84 million. So it's actually better. The continuing claims. Those are the people that have been claiming job support in the US for more than 4 weeks. So that's better than expected as well. That's quite. Although it's expected to rise, you can see here over 2% from 0.9 of 1%, and 9.2%. Big lift up in durable goods. Remember, durable goods are the stuff, the sort of goods that, by their nature, hang around. So hard drives, computer chips, those sort of things, things that can be stored in inventory for a long time, microwaves, laptops, all that sort of screens, all that monitors, all that sort of stuff that the US has been ordering and buying and paying for from its arch rival China. And big rise. You take out defense spending as well, over 10%. When you take out defense durable stores goods. So quite a significant hike there for durable goods. That's a bit of a surprise. How that has impacted the dollar is a bit questionable. So it's lifted the dollar on the data. So it's weakened the dollar on the data as the euro moved down. It's sort of into this area. We didn't actually test any key area really. It's been a negligible move. You can see there from that data. So jobs remain quite robust. Obviously, next Friday we've got the major non-farm payroll data. We've got another week's data next Thursday. We've got ADP as well on Wednesday as we start the new month next week. Jobs certainly not impacted so far by this the uncertainty and the somewhat chaotic policy announcements and step backs out of Washington. So we remain in quite volatile markets without clear direction. But the president, he's clear about what he wants to do, whether that's going to be successful as he anticipates and his team anticipates for the US economy remains, I would argue, quite questionable. Obviously, the chances of recession are still significantly higher than they were 6 months ago. But really, recession in the US is still a bit of a step away, I would think, given the nature of the resilience of the US economy and the resilience of the US consumer we've seen in the hard data, not in the sentiment data. So let's see if the sentiment data leads the hard data. It didn't last time. We sort of got ahead of ourselves. So, but this time the numbers are significantly bigger. The tariff numbers, they're slapping on everybody. Is significantly bigger. So that's again all in the detail as ever. However, as far as intraday trading is concerned, here on the 5-minute chart, euro dollar remains short, although it's drifted back up on the data. It's hardly moved it up, so that short position would still be in play here. Here with using this strategy, you've gone short here and wait for a close of the bar above the midline of the third moving average is how we trade this particular strategy. That's the 9-period moving average. So you never get all of the move, but you get most of the move. So that's say on the 5 minutes still short. If we got the time frame, the hourly chart is probably still that went long, but it's rallied and stalled. You can see that's looking to go across there to the downside on the hourly, but nothing's happening there. Went a bit too high there. 15-minute might have already gone short, I would guess. There we go. So there's move up, and we closed under there. So we'd have got out there and gone short here. So the 15-minute trader was short there on the 12:45 candle, and stop loss was being up here initially. 2 or 3 candles back. Turn of the move up there where that red line is, and at the moment his stop loss might be around here. At the 20-period moving average, or if you're trading it in pure terms, waiting for the candle to close back over the mid line, which is the green line, which happens to be sat on the 20-day there as well. So that's the 5, the closest one, the 9, and the 20-day moving average, all a bit mixed up. In fact, that's the 9, isn't it, the green? Crossing. So yeah. That's still short, 15 minutes. But again, it's all about time frames that you're trading, guys, isn't it? So we looked at cryptos earlier. Metals, gold. Again, gold had 2 down days and we're back bouncing today. Quite significant down days, but we've had such a magnificent run for gold, haven't we? You can be forgiven for obviously having a bit of a cooling period, and we cooled all the way into the 3,300 level. But these are, all-time high still in relative terms. So we're trading at 3,345 or 43 at the moment, with the 3,300 level finding buyers today, not yesterday. We did go under that a little while. If we look at the hourly chart and see how we went under that, there's a 3,000. It was in afternoon trading, US trading. We went under 3,300 yesterday, but by the close we were back over 3,000. So clearly, buyers down here at 3,300 for gold. It lifted it, and at the moment here on the hourly chart, a break of this 50-hour would be nice to take us back up to the upside. But you can see the size of the candles, not a lot of action, not a lot of direction. There's been much more direction in the Bitcoin move. As just do that as well on a similar time frame. So the Bitcoin move yesterday was quite very, very significant. Some big candles on Tuesday and Wednesday, and again we just given it a little bit back today. But as I said earlier, it remains still remains very, very big. Crypto. Indices, we have got some. I'll come to the live positions we've got open at the moment. There's only 3 at the moment. There was a lot yesterday, actually. Looked like they were going to trigger. And then, was it yesterday or the day before? Maybe, I think maybe the day before. But none of them actually happened. I think I remember putting up on, I think it was the day before, wasn't it? Let's just check. Trading strategies, was it the day before? Whenever, 22nd. So that was Tuesday, wasn't it? A lot of these were looking pretty hot when I posted this at 10 o'clock in the morning, but obviously by the end of the day, nothing actually happened, and we I don't know what we took that long yen position on Tuesday night. There was nothing last night. Last night there was 2 forex positions, and again the dollar indexes were looking okay to following the strong move we'd had over the last couple of days, but that's sort of cool today. So as I wrote last night, I didn't actually take any of those dollar index positions again. Having been successful in the last 3 here, we were up, whatever points it was overall on those 3. Last time, but it didn't. It just didn't. It wasn't triggering properly. It was having a go, but it just didn't. So we left them alone, and we've only got the 2 Aussie positions on: 1 long Aussie yen, 1 short Euro Oz. So both looking for a move positively for the Australian dollar. We'll have a look at that in a minute. Let's just go back to the stock markets and have a look at the one we have got open. This is. Been into it. We got in on this on the 21st. Was it the 21st? It was the 22nd. We got into that. Anyway, well, that line's there. We got into this on the 22nd. It was. That's right. We got in on this here. We were looking quite good yesterday. Had a strong update, but we've come back. And we've actually, as you saw there on a shorter time frame, we've been in to test our entry level, our stop loss remains here. Our target remains sort of up here. I might pull that down a bit, but it seems to have, although it's only 2 days in, the initial push the push that we got in on here may have run its course. So that's not, we didn't get in there. We got in there. Why is it there? Coordinates text star. It wasn't then. It was 11 o'clock. Was it then? It was there you are. No, it wasn't. It was then, wasn't it? 19. What's this? The 4 hour? Go back to the 1 hour. Oh, that's because I didn't actually place the trade on this platform. So 22nd. That's 23. No, it's 2022. That's right. It was here we got in. That's where we got in. So it's come back. Well, it came back the same night to our entry. It's come back again today, but it's bounced off it. So we're a little bit in the money at the moment, but so we're just leaving that to run. So the initial impulse may have run out. So I'm watching this quite closely. So I'd like to see this back over what the initial high that we got here at 35, 450. For the Nikkei, it's not too far away, but I was nearly going to close that out this morning as I saw this moving down. If you look at the 4 hour time frame, you see we moved down, up, run out of steam and down into the entry. I nearly closed that out this morning, but the 20 period here on the 4 hour held, so I didn't. And we're back up at the moment. But if this breaks here, I may get out of this earlier than the stop loss down here, which is under the 50 period moving average here on the 4 hour chart. So I'm looking to a break of this 20 period moving average on the 4 hour, and I'll probably be closing that out. But technically, the fixed stop loss on my trading platform is, which isn't this platform, is there down there at 34,280, I think it is. Anyway, that's the open position. It's in the money at the moment, and I say the other two crosses we had was the Euro Oz, which were both, last time I looked, were both actually out of the money. So Euro Oz, again, just go back to the daily and see from where we got in. So this was, is it short? This one? Yeah, it's your short. So this is actually a little bit in the money at the moment, I think. Yeah, not much, but a little bit in the money at the moment. No, it's not. We're back to here now. That's exactly where we're actually bang on where we got in. So we were short this, and it's gone out the money, and it's flat, basically, Euro Oz. And the other one was Euro Yen the other way around. No, it wasn't. It was Aussie Yen, wasn't it? It's Aussie. UKJPY at 90.91. And this one also, this is our entry, and we're just, again, out of the money a little bit on that one. But again, it's an end of day trade. This is only the 4 hour time frame. So hoochie coochie. Oh, yeah, that one got quite close to its stop loss, but we're back up. And in fact, we're back down, aren't we? Our entry is proven resistance here on this 4 hour time frame, isn't it? But anyway, so we've got 3 open positions, none of them doing particularly well. 2 out of the money, 1 in the money. Nothing to get too excited about, but we're in the money. For the week, we're up 100 points, 98.5 points. We didn't close anything yesterday. It's Thursday. Yes, so 98.5 points we are up for the day currently. So let's just pop back to the dollar and see if we've had any more response to the data. I wouldn't imagine so. It's been 113.67. So and there's that down. He's still down. He's into the 50 hour down. The 15 minute, the 5 minute was turning up, wasn't it? And again, it's sort of run out of puff, hasn't it, as we've moved up. So it's still biased to the downside. We're still short from our initial short would have been here at 12.35, and we're in the money still. So again, waiting on the again, if you, I don't know where you dropped your stop loss might be there, it might have taken you out. But if you're trading this with, you can code this approach. You know, a break back over the middle line, the 9 period moving average would take you out, but only on close of the. There we go, just right before my very eyes. There we are. It's taken us out of our short position from here. So we made a few pips on that. If this candle closes there, it's on the close of the candle, not on the actual intra candle. Like it's gone it there, it's touched it there, went back through it there, but it's actually got the candle body has to close. The closing price is how it's coded. Above the 9 period moving average, and that's looks like that may be happening. So there's a few pips in the bag, not very many. But anyway, the news wasn't particularly market moving. Clearly, we've got claims, jobs remain very, very robust, and we've had quite a significant surprise in durable goods orders, particularly excluding the defence market. So big surprise to the upside. Still to come today in 10 minutes. Actually, let's hang around for another 10 minutes, shall we? See what these existing home sales numbers are like. Remember, yesterday's new home sales were much stronger than we'd expected. Where's the new home sales gone? Was it yesterday? It was yesterday, wasn't it? New home sales. There we are, 724,000. That's right, they were much better than expected. Permits had dipped earlier in the day, but that was a strong number. So let's have a look at, let's wait till 2 o'clock to let at least that data's come through, see what existing home sales. Obviously, existing home sales, second-hand homes, the churn in that market. I mean, it's a much bigger market than new home sales, obviously. 4.14 million. We're expecting from 4.26 million in February, so a decline. But see how significant that is. So see how that moves things in about 10 minutes. So let's have a quick look at some other markets while we're waiting for that data to come back. So there we are. There's a this is a really good example, guys, of having a strategy and accepting it's all its flaws, its bugs and its bears in its warts. So that looked like a really strong a good winning trade, didn't it? There we were short there, just following this crossing moving average. It moved back up, so we might have got out. Certainly would have got, he could have re-entered there as well. Certainly I would have added a second position there as that's moved down. But waiting for the candle to close on this occasion has potentially cost us puts. But although it's not over, we're running into the next 5 minutes. I'll see where that fails out. So what was looking like a winning pip is like it's gobbled up, and we still a few pip and a bit in that, but it's given back pips, which a lot of traders find very, very difficult to accept. But yeah, there we are. Just have another look at some of the other metals as well that have been reacting differently to gold. Gold, as we say, had this 2-day cooling, but we're bouncing today. So if we look at the copper's benefited quite significantly from the cooling of the tariff chatter, because remember, China is a massive consumer as well as producer of copper. So copper's continued its rally. It cooled yesterday, but again, it's already got to its 61 fib level from this decline from the end of March to the middle of April. So copper's continuing to move up. The rare earth story is a massive story. China's not the copper's the rare earth, but obviously related to that. And it's a huge bargaining chip that the Chinese have with not just America but with the rest of the world as well. So copper remains big, and then silver also. A big strong day, even stronger day than copper yesterday, and not declining like we saw with the gold market, but it hasn't had the big old rally that gold has had, and it's suffered being an industrial metal more. It hasn't been on a relentless rally. So when we start now comparing our gold and silver charts, they obviously diverge quite significantly, but they're now coming back into sort of focus. They're both on the bid at the moment. So this is the gold on a daily chart and silver on the daily chart, both getting close to back up to the not shy of their all-time highs up here at 34.30 here for silver, 34.50 there for silver. So yeah, silver, very strong day yesterday. Still 10 minutes ago. I'll tell you what, guys, I'm going to wrap this up. Actually, I've we're now staying, to be honest, and the data was a bit nonplussed. So let's leave you with the euro back 113.70 and ticking up to date. 15 time frame still short on the day. The hourly moving up, but also running into steam. So I'm going to wrap this one up now. See you tomorrow. Tomorrow, Friday, it's the end of the week. I'm going to wrap up my April trading log for April tomorrow, and I'm going to use next week as a first trading week of May as well, just for a point of note. Tomorrow, earlier on, we got retail sales out of the UK, manufacturing and retail sales out of Canada as well, and then the Michigan data later on in the session tomorrow out of the US. So a relatively quiet day tomorrow to wrap up a shortened trading week here in London following the Easter holidays. So take care, be safe, everyone, and we'll see you all again tomorrow. All the best. Bye-bye. Just find my... Ciao, everyone. Bye-bye.